in this podcast, you're going to learn how to create a budget for your business. If you haven't done this already, or even if you have done this, it's super, super valuable that you take in what you learn in this episode, because you may very well pick up on something that you're currently not doing, or a few ideas that you can add into your existing process. Guys, budgeting is an absolutely essential part of running a business, especially when you get to that growth stage and you really start to know where your money lies and what resources you have available to you. Guys, you're going to love this episode. I absolutely know it. With one of the most popular and most requested guests on the show. He's back again, Mr. Danny Kerr from BT Academy. You are going to absolutely love this, I can guarantee it. And I'd love for you guys to leave some comments or let us know what your experiences are with budgeting in the Facebook community, or wherever you see this come across social media, or in your emails, even just reply to them, and I'd love to hear what your thoughts are. Please guys, join the conversation in the Facebook group, and I look forward to hearing your feedback. Enjoy this show. Today's podcast has been proudly brought to you by Tradie Web Guys. Tradie Web Guys work with tradespeople only on their websites and marketing solutions to help them stand out from their competition. Everything from web design through to SEO, search engine marketing, content creation, you name it, guys. It is a customized solution for trade-based organizations, and it's fantastic. Head across to tradiewebguys.com.au/apply, fill in the form, and let's have a conversation.
Giving tradies and contractors around the globe the tools to run a modern business. You're listening to Toolbox Talks from the Site Shed. Now here's your host, Matt Jones.
Danny Kerr, welcome back to the Site Shed.
Thanks for having me, man. Long time no see.
Absolutely, mate. You're back by popular request. For those of you guys that don't know Danny, we did our first series in 2016, November, and that was called The Top 3 Mistakes Growing Trade Businesses Make. And in May of 2019, we did another one, which was scaling your business from 500K to 5 million. Danny runs BT Academy out of Canada, and essentially they're an amazing business coaching program, services the North American market. Danny, what's been happening since you were last on the show?
Oh, I don't know. Lots. I think we were talking, before we started here, just 3 little girls now, raising. So busy being a dad. BTA has been growing like wildfire. I think we have 300, just over 300 companies we're actively working with right now as we speak, and just under $1 billion. It's like $950 million that all of these contractors are producing together, and just watching the impact you can have when you have an idea. It's so neat to watch. Like we've got, just incredible results coming out of their businesses, and our team's been growing internally, and the marketplace itself it's starting to professionalize. I think people are looking at new ways to do things, and you're right on the forefront of that as well. I'm sure you see, and
it's great. Yeah,
it's been neat, man. Like just an idea we had in a restaurant with a buddy 6-7 years ago, and here we are today, just with a massive influence and a bunch of people that are getting a lot out of it. So it's been good.
That's awesome. And have you started, or you're about to start a new podcast?
Yeah, so starting, I think in the fall, we are planning to launch it. We've got actually 12 people on our team committed to a huge just content marketing outreach strategy. And obviously due to COVID, I'm an advocate of being in person as much as possible. I probably go to 50 speaking events a year, and that doesn't happen anymore. Yeah. So we are pivoting, and it's been healthy. I've been watching even just a little bit we've done so far. The marketplace is hungry for a lot of what we're doing. So I'm happy to do it.
I mean, it's an amazing time, isn't it? How businesses across the board have just sort of been able to, like with the right mindset, you can really make positive shift, regardless of the situation. And I think, we've seen it with so many of our clients, just got these amazing results, just through finally sitting down, taking the time to think about stuff and strategize and, put positive action into place. It's been great.
Forcing us to be better, man. We
exactly
even us, like we got stuck in our way of what works for us, right? We just kind of like, hey, this is what we do, and this is how we market, and it just forced us to think differently, and it slowed us down enough too for a little while to take action on that. And now it's starting this fall will be a whole new world. So and same with our members. People would have never considered doing digital estimates over Zoom and all these things, and they're realizing like this works. But we just never slowed down enough to try it. So,
exactly. Yeah. It's great. I think there's certainly been a lot of amazing things that have come out of this, which is empowering so many people across so many different areas of their businesses and departments. Like I think it's been scary, but it's been also quite positive, I think, for the general consensus. We're back for another series. This is going to be the first episode, and this is where we're talking really about measuring what you manage. So we've broken it down into 3 different episodes. We're going to be talking about budgeting, forecasting, and accountability. It's extremely relevant, I suppose, for the Australian market for all you listeners out there, because this is our financial year actually runs from July through to June. As always, Danny's always, when he comes on the show, he leaves behind these amazing resources, incredible tools that you guys can go and grab for the grand total of 0. So you head across to the show notes for this episode and you'll be able to get access to Danny's landing page. And on that landing page is a plethora of amazing resources which you can go and grab and implement, more importantly. And actually, when you do implement them, jump into the Facebook community and let us know how you've been using them, because I know a lot of people have been doing that, especially the spreadsheet, Danny, that you left behind a long time ago. Yeah. That was a big game changer for a lot of people. So thank you for your assistance there.
Cool to hear, man. Yeah, you're a world away. People are using this file that I sat down and built years ago. So that's cool.
Exactly. Yeah. And I mean, to be fair, we're kind of preaching to the converted here, and you'll find this out when you start running your podcast. Like the guys that we talk to and speak to, they're proactive in that space. These guys they want to learn. They're listening to podcasts. They're watching videos. They get these resources and they go mad for it. And you'll probably find as well, it will start to funnel you a really, really good type of avatar for the Breakthrough Academy. And that's what we noticed at Tradie Web Guys. And it was by design, I should add. Like I sort of realized that the type of people we wanted to work to were a certain type of business owner that were wanting to learn and were keen to adopt new processes and systems. And that's worked really well for us. So I'm sure you'll find a similar thing yourself.
That'd be huge. Yeah, that's why we do so many speaking events, right? We go off and people who are engaged in conferences and learning are the same people, obviously, that we would want to teach something because they're the ones open to learning. So yeah, that's good, man.
It's an interesting scenario or dynamic when you sort of go from, like, when you're starting a business and you sort of take all the work you can get, to now we're in a situation where we actually turn away more work than we take in, because we work with certain companies and certain people that have certain mindsets and certain goals, and we only want to work with them because we know we can help them, right? And we know they'll do the work. So it's really good.
It just helps you master what you do, right? I think when you're a generalist, it's hard to like dig deep with people, and also for yourself, it's hard to scale like what you do because it's all just so custom.
What are some of the pain points, I suppose, we're going to try and address throughout this series, just to give the listeners a bit of a heads up as to what they're going to be in for?
Yeah, so we'll go down deep, but we'll start up at the top where we're going to talk about budgeting. We're going to talk a lot about what's the proper way to set up your budgets, what's the proper reference of like numbers and metrics and things you should be tracking, and what KPIs or what big numbers do you want to be looking at every single week and month in your business to make the biggest change. Then we'll get into a little bit of forecasting and how do you build a budget, then off of that budget, a sales plan, and then off of that sales plan, a production plan where you can actually literally have goals where you can see every week, like, are you actually trending to hit or not? And how is the flow of everything moving? And then we'll finish it off with accountability. So it's great to have numbers and it's great to measure stuff, but it's meaningless unless you implement those numbers into a meaningful way for you and your team and for everyone to make different actions and ideas out of, right? So we'll finish off with that. We'll basically give people a pretty good rounded way to set up their organization for the next fiscal year.
Well, we may as well jump into budgeting, because I know budgeting is one thing that, like, over the years, I've certainly struggled with. I've never professed to being a numbers guy. However, of late, I must admit, through the help of some of my coaches and people like Ed Plant, and who sort of encouraged me to regularly visit numbers and my, reconcile my accounts and get in there and check profit and loss. And I've actually become quite a geek on numbers. I've sort of really, really enjoying it. And reading these amazing books like Profit First and all these things which really sort of drive home the importance of understanding your numbers and allocating your finance within the business accordingly. I'm starting to really like it. And so budgeting is one thing, I suppose, that a lot of people struggle with. I certainly have struggled with it in the past, because it's kind of like, well, if there's money there, we can use it. I think as business grows, and what I'm finding especially is, you can't sort of go out, you can't have that kind of mindset, if there's money there, then we're good kind of thing, because as you start bringing in more team members, I mean, we've hired, two new full-time staff in the last month. And, if you don't budget and you start spending money that's not there, become payroll, you're screwed, So, but one example of many, I'm sure. So I think for a lot of you guys out there, especially you guys that are maybe in the startup stage and maybe preparing to enter into growth, once you enter into growth, you need to have this shit down, because it will save you a lifetime of grief. I can 100% guarantee you. And having people, like Danny in the corner here that can, help you with that sort of thing is it will save you a ton of money and a shit ton of time and a lot of grief. Man, let's jump into it. I mean, I really want to hear about this. And also, Danny, this topic, I mean, I suppose budgeting, like we're kind of speaking to the business owner here, but I feel like even if you're not a business owner, this is the kind of thing that it's kind of like a life skill, right?
I've been budgeting since I was a kid, man. And then this thing called mint.com came out, and it's like, I've been saving money since I could make money. And I find it's interesting when you meet people who are older, you see like two different categories. You see people who are quite financially responsible and quite well off, and people who are every month getting further and further in the hole, and their debt load is huge. One person saved $1 every day, the other person lost $1 every day. And the longer that goes on, the bigger that spread happens.
Yep.
And, I didn't plan as much to talk about personal financials, but if your personal financials are a mess, your business financials will be the same, and vice versa. Like it's a habit, it's a way of being and a way of thinking. And here's another big thing. I always think about like, you can go and live in the now all you want, but guess where you're going to end up in your future? So why aren't you planning for that future and building towards that? Because since I was 18, I've been saving money, and now, I'm 30. What am I, 33 now? I thank my 18-year-old self. You know what? Like, there was a lot of hard work. There was a lot of sacrifice. There was a lot of not, stupid little things. I remember when I was in high school, this sounds kind of weird, but I'll tell you, everyone would go and buy lunch every day lunchtime. And I wouldn't. And I would either bring a lunch, or if I was hungry, I would literally eat the pizza crust of my buddy. Right? It was terrible, but it was like little things like that. And when we graduated, I had 15 grand saved, and he was in debt. I started my first painting business with that 15 grand. I bought my ladders, my equipment, and that kind of continued and extrapolated. And, it got a couple $1,000,000 in the bank now. And it's just like, well, how did that happen? It was just slow progression of fiscal responsibility. And it was a habit that had to get formed over time.
But I think, was that something that you were taught? I mean, did you have mentors, or were your parents good at teaching that kind of stuff? Because I must admit, I grew up and I was the guy that was spending the money. Like, I never had any financial advice, education when I was growing up. Parents didn't really know what they were doing, and I had to learn through the hard school of knocks.
I think I was like 15 or 16 years old. My mom got in a car accident with me, actually. So her car got totaled, and we lived on welfare. So we had $500 to $800 a month to live off of, plus I think a little bit of subsidy or whatever. It was pretty slim pickings, and my whole life I just grew up broke. The one thing my mom never did is she never got in debt. So she always lived paycheck to paycheck, but she never got massive debt. But I remember when I was young, she got in this car accident, and she brought the car back to the house all wrecked, being like, I'm going to fight this claim because I don't think it was my fault, but it was her fault. Anyway.
Right.
And I just remember freaking out, be like, you're not going to be able to go to work anymore. We're going to lose everything. And I was a young kid, but there was something broke inside of me. And I was just like, I don't trust just to let adults figure it out anymore. I need to take a bit of control over this. Yeah. And so I got a job, I started working, I saved some money, and that saving just gave me almost like a security that I've never had before when I was younger. And I think I got a little addicted to it. I think I got a little bit of, whatever, serotonin hit your brain in a certain way. And the pattern started repeating. And so, no, I didn't learn from my parents. If anything, they're not very good examples of what it looks like. But what happened was I won a couple of times. I did it a few times. I saved my own bacon. And then the feedback loop started, and then away we went.
Yeah. So, I mean, and budgeting for business, again, it's one of those things it sort of sounds like, I know when I first started looking at numbers in general with the business, and it was really quite a daunting thing. And to be honest with you, I didn't want to do it. I just preferred to bury my head in the sand a lot when it came to the numbers of the business, because I found that it was terrifying me. I didn't want to know what I owed the tax department. I didn't want to know what bills I had coming out. As long as there was money in there, I was sort of happy. And then, over the years, I sort of learnt that. And ever since I've actually actively, been like a massive numbers advocate, the business has just exploded, and they're like, wow, I had to learn that through the school of hard knocks. But budgeting, I suppose, is where it all ideally should begin, I suppose. So anyway, the point there being, if you're a business owner, or if you're in business, if you're, an employee, this is going to be relevant to you. So there's definitely going to be things here which you'll be able to apply to your, if not business, life. So, okay, let's go. Let's jump in.
Yeah, let's talk about one really important thing about just the importance of percentages and the importance of understanding what percentages really mean to the business. Because if you're doing, say, $1 million a year, and you could change things by 1%,
yeah,
10 grand, right? You're $5 million a year. That's now 50 grand. That's a full-time administrative salary.
Yeah.
Right. And think about how much time as an owner you spend doing things you probably shouldn't do. And you're like, I can't really afford that extra overhead. It's like, save 1% on labor, save 1% on material. Look at like what's going on with your marketing expenses. Which ones are delivering an ROI? Which ones aren't? How do you move things in the right place so that you're getting the maximum, ROI on your business? And a lot of people too think when you're small in a business, it's like I got to work harder and I got to put more time in, and then I'll make more money. And that's true to a point. But over time, the money your business is making is a much more like effective tool to use than more of your time. And it becomes, you got to respect that space. It's kind of like wasting your time. It's like, you're going to sit in a truck all day and just twiddle your thumbs. Well, it's the same thing. If you don't budget, you're kind of just throwing good money away that could be working for you.
It's an incredible revelation once you understand the compounding effect of everything, mind you, not just money, the compounding effect of what you just said then, like doing small things regularly, whether it's fitness, whether it's like health related. Like, it's an amazing revelation once you grasp that, because you realize, I mean, and I've done it myself, I'm guilty of it. Like, sometimes you're like, oh, I need the business to increase this much in revenue next year. I know, let's add a whole nother service in. And you're like, no, you don't need to add a whole nother service in. Like, we get all the time, people are like, oh, I'm a plumbing business and I want to increase revenue, so I'm adding electrical. I'm like, it's a terrible idea. I'm like, you don't know shit about electrical. Like, all you need to do is make small increments into the different, and even at the departmental level, how do we improve admin by 2%? How do we improve dispatch by 2%? Like, those tiny little bite-sized chunks make such a big difference when you look at the compounding effect over the course of 12, 24, beyond months.
So that's the key to this whole idea of budgeting. It's being able to say, first, being willing to look at it. Okay, what did we do last year? Not just how much revenue did we do, but how much did we spend on each category, each of our chart of accounts, right? And what percentage is that of our revenue? Sometimes people just look at the number and they're like, wow, we spent a lot on labor this year. But what was the percentage of labor?
Yeah.
Right? Oh, it's 34%. Okay, cool. Well, why was it 32% the year prior? Yeah. Why did it go up by 2%? What happened? Oh, we didn't increase our charge rates and inflation happened and we paid our guys a little bit more. Oh, right. And it's small little things start to like bubble up to the surface and show themselves as problems or as opportunities, right? So one thing we do with all of our companies, and us as a company as well, is, at the end of our fiscal year, about 1 month prior, we start to gather our data. As we go into the new year, we usually don't do it right away because we need to get all final numbers, finalized and reconciled. Yeah. But within about a month of our first year or next year going in, we can start to really look at the actuals of last year and then chart of account by chart of account. Yeah. Spend hours literally thinking why percentages came in the way they did, and what physically we're allocating money to next year, and what physically are we doing differently to change a 1 or 2% change on certain areas, right? When COVID happened, if you don't have a budget, you're screwed. Because you're just like, I don't know, like cut all overhead and employees and put everybody on furlough. Like, what do you do? But when you have a budget, you sit down and you say, we need to cut that. We need to actually increase that. We need to keep these people, and you can make much more dynamic decisions about how to move forward. And you said it earlier, but like you can't change what you don't see, or you can't, what gets managed gets moved in the right direction. Yeah, and that's the key to.
I mean, I can't be a bigger advocate of visiting your numbers on a weekly basis. If that means just sitting down at a coffee on a Monday or a Friday morning or whatever, and just reconciling. I mean, a lot of guys out there are like, I don't have time to do that sort of stuff. And I'm like, you need to make time to do that kind of stuff. Like being regularly being in your Xero account or your QuickBooks or whatever. And just like, even if you outsource that stuff to a bookkeeper, I just feel like it's so important that you as the business owner visit those numbers, like just so you know what's happening and you can keep on top of it.
Yeah, there's a difference between what's in your account and what you've made, right? You've collected deposits. You've got expenses maybe out to subcontractors ahead of time before you collect it from the customer. Like it's not a very good indicator. It's a good indicator for cash flow, which is a whole other topic we could probably talk about another day. But knowing that, right now in the last, 2 months of work that new crew's been working on, their average profitability is 5% lower than the rest of the crews. And it looks like it's mostly on material. Yeah. I wonder why that is, right? And it just causes action versus just random thought and reaction.
Yeah, and it's interesting too, like even that topic, and it's sort of, I suppose we're sort of blurring the gap there between the next episode where we're talking about forecasting, because I think that's one thing that's also a little bit, like let's forecast. And I've had problems with that in the past, but once you sort of understand, I suppose, like once you can track trends, like it does give you a lot more predictability over, forecasting. And like you were saying then, we know that, we know that we've got payments coming in next month because we'll be sending off, invoices to this many clients for progress claims and that kind of thing. Like that sort of enables you to budget for that month and so on and so forth. So it's a super important little ecosystem there.
Yeah, man. So, yeah. And if nothing else, if those who are listening, you're like, yeah, we kind of do budgeting, we kind of don't. Probably the most impactful thing you can start to do is just looking at every job you produce, job by job, how profitable is it? Doing proper job costing and doing it within a week of the job being done, right? So that you can actually react to your team, you can react to the material spend, you can start to allocate, the right changes to the next job, or you're maybe not charging enough. When I look at that, I mean, I remember sitting down when I was 18 years old in my painting business, and I was almost excited. Like I would sit down, it was like 12 at night. I had paint all over my hands. I was tired, but I was doing job costing. And my mom used to think I was so weird running this business. And she's like, why are you up so late? And I was like, I'm counting my money, Mom. Like, just let me plan in my future. But it's that dedication that, like, I don't care how busy I get. I don't care how much, I got to go paint a house. I got to do this. I got to do that. I need to make sure my financial state's in place. Otherwise, why bother doing any of this? Mm-hmm. And I caught all kinds of mistakes, and I probably saved myself at least $1,000 a week just by like looking through.
Wow.
Ways.
Yeah, it's massive. Let's talk a little bit about how we implement these budgets. Like, I think for me, especially, like having a framework that you can kind of follow is super important.
Yeah.
Everyone knows the word budget and they kind of know what it means, but no one really knows how to do it.
Yeah. So we have a template that'll be in the downloads resources that we've had there for years with your show notes. So there's 3 sections. So the first section is last year's actuals, and it'll have different lines for revenue. So you can track, how much you did in construction, how much you did in repairs, how much you did in, commercial. And you can actually look at different revenue streams.
Just while you're on that, Danny, I'm just curious. So obviously I'm hoping like most of the listeners and viewers out there are using bookkeeping software. And if you're not, you sure as hell should be. For the sake of like $50 a month or whatever it costs, it's an incredible business asset. Now, do you still advise using spreadsheets and translating that data into spreadsheets?
I do, because it just helps with working with it a little more. But we have QuickBooks. So we started actually on Xero, but we just found North America's market's just much more attuned. All the CRM systems are all linking to QuickBooks.
That's right. Yeah. Yep.
But whatever it is, we absolutely use that. I find it's a little easier on the eyes. It's a little easier to just play around in my Excel file. It's more familiar than to mess around and trying to find the section in QuickBooks, because you can do budget versus actual in QuickBooks. It's set up for it. But we do it in an Excel file. And ultimately, every single year, we sit down and we say, what was last year's actuals? Okay, great. And we go through revenue, all the variable expenses, all the overhead costs. Every chart of account is thought through as well, because you don't want something simple like, if your labor for your office staff is merged with your labor for your field staff, that's a problem, because you can't actually see the performance of the field staff now. Mm-hmm. So we just take time to make sure everything's allocated properly. And we look at our next year. So this is the next column that we have in that Excel sheet that says, that was last year's actuals. Now what's this year's goal? And I always say to people when I'm building a budget, like you can make it pretty complicated, or you can make it pretty simple. Start with this. You just go, is it going to be more, less, or the same, and why? Mm-hmm. Right? So vehicle leases. Is it going to be more than last year, less than last year, the same, and why? It's going to be less than last year. Why? It's going to be more than last year. Well, we're going to buy another vehicle. We have one more lease. That should be an extra $300 a month. Okay, let's add that to the budget. Okay, let's go to the next line. Is Google AdWords. Is it going to be more, less, or the same? Why? It's going to be more. Why? Well, we're going to try and grow, and we're going to try and get 20% more of our market share from Google AdWords. Cool. So let's increase that even by 30% just to give it a bit of buffer. And we just slowly go through each chart of account, item by item by item, and more, less, same, why? And away we go. And as we go, we don't just put a number in, we write notes around each number and say why we chose the number we chose and what we did to get there. And that's that part with the QuickBooks. Like, I don't know if you can put in the notes in the same way, and it's just easier for my eyes to kind of go through that way of planning. And most of our members, that's where we do. And then right next to that, we have the actual section. So as they're typing away on their job costing, and we get them once a month to put in their overhead expenses from QuickBooks into this document we have.
Per chart of accounts?
Well, it mirrors QuickBooks exactly. You can, because it's Excel, you can type it up. But basically now you can see, you're like, oh, last year we had an overhead staff was at 10%. This year we're planning to be at 12, and currently it's at 15%. Okay, so why is it 5% higher than last year and even higher than our plan? Oh, because we had that early hire that we hired on. Okay, good to know. And you can start to see why things might be different, because as much as you make a plan, it's probably not going to turn out the exact way you planned it. But now you can understand why and what to do about it.
Mm-hmm. So, I mean, it's not that complicated, is it?
It's not. It seems scary, but and you sit down and you start to really look at numbers. And I'd say within 2 or 3 hours, if you've never done this before, within 2 or 3 hours, you'll start to see a pattern. And when you start to see that pattern, it gets kind of fun because you go through the whole exercise and you realize, oh crap, we're going to make $25,000 this year. What's the point of even being in business, right? Or whatever you notice, right? And you're like, well, what can we do about it? Because I often tell my guys too, when they're working through this, like, have a number that you're trying to hit in profit. Are you trying to make 100, 200 grand this year? Good. Don't stop tweaking your budget till you figure that out. And there's a combination of like more revenue, more profitable, less variable expenses, or more profitable gross profit margin off of that revenue. And then how you allocate those overhead expenses. By looking at it a year ahead of time and seeing that this actually is not a very profitable venture, gives you a ton of time to sit down and problem solve stuff versus reacting later and seeing that you overspent on that big shiny truck and you probably shouldn't have bought it when you did.
Yeah, which is probably, I'd say, the biggest problems that most young business operators start with. Oh, great, I'm making all this money, I'll buy a new ute.
Totally.
Yeah.
And we reward ourselves too, right? Like we'll say, when we get to this point and we make this much money, then we will purchase this thing, right? But it's not a reactionary decision or an emotional decision. It's a very well thought through, like calculated decision.
Yeah. So. I'm curious when it comes to, so you've sort of given us a bit of an overview now as to like how you like to map out the annual side of things, chart of accounts, so on and so forth. How do you then translate that into digestible bite-sized chunks that can enable you to pivot and make changes which will affect that annual figure? You know what I mean? Like, I know when you look at an annual budget, you go, oh, great. But then if you don't break that down into bite-sized chunks, you're like, well, that didn't work out.
Totally. So once that budget's done, you have a few different things you break it down to. So the annual budget gets broken down to a quarterly review where you actually can change the budget once a quarter. That quarterly budget is documented or is basically pulled forward once a month. So we have every single month, we have all of our reconciliations of all of our expenses so we can see them. Actually, Igor actually literally sent mine 2 days ago. So I was just looking at it, but we did really well. But we can start to see the month to month. And then within that, you do a weekly or at least a bi-weekly review of your variable expenses. So your job costs and stuff like that. And that kind of rigor, that type of a process will keep things in check, right? So once a quarter, it's like, okay, so based on January, we're now in, March, April, how did that, first 3 months stint go? Did we hit? Did we miss? By how much? In what categories? Why did that happen? Great, let's make a small adjustment moving forward, right? Once a month, you're basically reporting on the original goal versus actual, and you can see where you hit and missed and why. And I don't change the budget monthly, but I can at least look at it and start to be like, oof, we really overspent in this one area. Maybe this month we should be a little tighter in this one area to try and make up for that and try and get back on track by the end of the quarter. It just changes small decisions. And then once a week or once every 2 weeks, if you're looking at your job costs, you can really get to the nitty gritty of it with, John, you're not productive. Yeah. I can see it because it's every job you're working on and you can make immediate change versus waiting for your accountant at the end of the year to tell you whether or not you made money, right? So
I think people rely, in my experience, I've been there myself, like don't rely so heavily on your accountant and your bookkeeper. Your bookkeeper, they might be in there a lot, but they're not always looking for the things that you need to be looking at in order to, take the business forward financially and to keep on track. What do you think?
We've found one really good bookkeeping company in 6 years of looking. They don't understand your business and your model and how you operate every day. And they just want to set you up a standard, way to track financials so that the government's happy. Yeah. But they don't understand what it takes to make you happy. And so you need to take a lot of control and you need to personally understand your financials. We use one company, I'll give them a bit of a plug in the United States called Bookkeeping for Painters that we refer to all of our members, and they're absolutely incredible. But what do? They specialize in the trade. They understand the industry and they've built an entire process around the support of that and a bit of a coaching model on the back end to help, because it's not just about what the numbers are, it's what to do about them.
Yeah, exactly. And I would honestly say for anyone that's out there and starting in business, or if you've been in business a while, like there is nothing more important than investing in somebody that can help you with that to begin. I reckon like that's where I went wrong. I'm sure when I started business, like I just relied too heavily on an accountant who was just, and let's be honest, no offense to any of the accountants out there listening or watching this, but you guys typically suck at communicating. And it's really hard. And not only communicating, but when you do communicate, or when they do communicate to you, it's so often in just like language. You have, it may as well be in Latin. Like you can't understand anything they're talking about. And so like being able to like have someone that can teach you those kind of things and learn the talk and learn what a profit and loss statement, how to read one, learn balance sheets, like learn all these kind of things, so important when you're running a business. And I think, well, I certainly started behind the 8 ball there. I just went into business, started making money, think, oh great, this is great, I heaps of money, and then all of a sudden bang, smash.
A good rule of thumb, we audited all of our members, so we have complete financial views of all the companies we work with. Nobody spends enough on accounting. Almost nobody. And people are like, well, what is enough? I'd say at least 1% of what you're doing in revenue should be spent on your accounting and booking practices. And people are like, well, why? Like, I got this other person, I'll do it for cheap. It's my mom's buddy or whatever, right?
Exactly.
It's not worth it. It's going to cost you way more in the long run by not having good understanding. So yeah.
Let's talk about metrics and let's wrap it up. What are some of the metrics you'd like to measure on? I love the chart of accounts thing as well. I appreciate that most of you guys probably do, but essentially when you've got your bookkeeping software, instead of having, say, a chart of accounts, which is sales. So every time you make a sale, it comes through as sales, you break that down into the different areas of sales or the different services. So it might be block drains, it could be hot water heaters, it could be roof and gutter work, whatever. And so when you're actually reviewing your data, you've got a really clear understanding of which part of your sales department or which area within your sales department is profitable, what's making the most money. So then you can either, like, it puts you in a position of leverage in the sense that you can really see where you should be spending more of your time or where you're currently using a lot of your resource, or it just gives you a better understanding of the finer details, as opposed to we've made this much in sales, because it's not really helpful.
That goes along with a few things I'm going to say here. There's different metrics. I'm going to go outside of just financials here for a second, but I'm going to read through a little list here that we track. We call them KPIs. Basically, we track with our companies, and it covers the financial side, the production side, and the sales side. But obviously, the first one we talk a lot about is just revenue. So knowing what revenue sources you want to track separately, again, just like you're saying, so you can see which ones are producing and which ones aren't. It's your variable expenses. So those are all the things that have to do with producing the job, right? So your labor, your subs, your materials. So those will go up the more you do, and that's a good thing, but you want to keep the percentage within a certain bracket to make sure you'll hit your, what's next one, which is your gross profit number. And a lot of people don't realize how important gross profit is. I would arguably say, this is my personal opinion, gross profit's actually more important than net profit, right? So gross profit is the money you make after you produce the job. Yeah. So you still have to pay for overhead and all the other stuff, but how much did you make? Because that's the amount of cash flow that you have to reinvest in the company. And if that's tight and if that's super low, good luck growing, because you need to invest money for the future. And if you only have enough to pay the bills for yourself, it's very tough. I see a lot of people mess this up too, because they're smaller and they charge themselves out an hourly rate where it's good for them. They're like, woohoo, I'm making $50 an hour. Like, what? Like, I'm great. But then they start to add overhead and trucks and vehicles and marketing expenses and new staff, and they need to increase their charge rates or they can't actually grow. Growth actually hinders. So gross profit margin, everyone varies in this. Everyone always asks me, like, what's a good gross profit margin? It can vary from like as low as 15% doing custom homes to as high as 70% doing small services like junk removal and window cleaning and stuff like that. Fixed cost is obviously the next one. So those are all the different things that you kind of have to pay no matter how much revenue you do. And they usually come out monthly at some level. The only thing I'd really say about that is just know how much you want to allocate to different categories of your business and which ones are providing an ROI and which ones are dead weight, right? Sometimes people spend a couple $100 a month on something that they kind of forget about and it's slowly bleeding them. They don't notice it a ton, but those things all add up. So to do an audit on that quarterly and make sure you're cutting out, overhead that's not providing an ROI, and to pump it up into other areas is a really healthy exercise. And then finally, your net profit, which is the culmination of all those things combined and what's left for you. There's a couple of thoughts on this. One, I watch all types of industries in the contracting space, make all kinds of different money and all kinds of different revenue. Almost everybody, and there's a few outliers, but almost everybody makes between 10 and 20% net. And if you're making less than 10, there's probably something wrong. And if you're making more than 20, please tell me how, right? But most people fit kind of within that parameter. And a lot of people will look and they'll say like, man, I'd love to be a builder one day. Those guys have such big jobs and like, it must be so easy for those guys to make money. They have really small gross profit margins and their net is a little tighter, right? Yeah. But they have less overhead too. So that's why they still make usually 10 to 15% net, usually 10-ish. And then these other guys that are window cleaning and they've got $300 average job sizes. And it's crazy. It's a lot of work to be able to get that many leads. Yep. So I call it the great equalizer of business, capitalism. If there's opportunity to be had, we filled that bucket and it's somewhat even across the board. But those are the big ones. There's some other stuff we'll go into the next episode when it comes to sales and production planning. So like your average job size, lead slippage, productivity rate, your charge rate. You can start to use a lot of these metrics we'll go into next on like how to project out what's going to happen in the future.
So I'm just curious, Danny, like with the budgeting side of things, like obviously we think, and you said yourself, you kind of got to step a little bit outside of financials. Where in that little ecosystem there do you consider things like staff, like HR and things like leads and, conversions and that kind of stuff?
Yeah. So you want to build it all backwards, right? So you go, once you finish your budget, you go, let's just use $1 million as a round number. We're like, we want to hit $1 million in revenue this year. Well, you have to build that backwards into your sales plan now. Right. So we're going to get into this in the next episode. But if you know your average job size and you want, let's say it's a $10,000 average job size, you want to do $1 million, that's 100 jobs, right? And then you're like, well, we close about 50% of the quotes we give. Well, that's 200 quotes. It's like, okay, good to know. And then it's like, how many leads do we need to get? Well, usually about 90% of the leads we get, we end up quoting. So you need 220 leads. Mm-hmm. And then you can go even deeper and you can start to say, well, where are we going to get those 220 leads? Well, historically, we get about half from referrals. Okay, so 110 are going to come from referrals. Where's the other 110 going to come from? Well, last year we got about 150 leads. So we got to figure out this gap of 70 and we're going to put some money into Google AdWords. And again, now you go back to your budget and start reallocating the right money because you know the numbers you're trying to achieve.
Yeah, that reverse engineering, I think that's, to be honest, it's the only way. It's kind of actually as well, like it's exciting because when you look at a big number, like say you put like, you've read a book and they said, write all your dreams and goals down and you write down, I want a big house and I want to make $1 million, blah, blah. And you go, okay, great. And then you look at it in a year's time and you go, oh, shit, nothing even changed. But then when you can take that and you can reverse engineer it into bite-sized chunks, and this is something that I've been taught by coaches and whatnot over the years, if you can take that down into weekly, daily actions, you're like, oh, you mean that's all I've got to do every day in order to get that? Easy.
That's all it takes. Point in the right direction. It's a game changer for me. It's how I grew up. This painting company that I ran when I was a kid, it was a franchise organization. And they basically just told me exactly what my numbers needed to be, helped me break it all down, and then held me really accountable to hitting them every week. And I just didn't know any other way to operate. That's just like how I got through the year. And what I realized long-term is recession, no recession, pandemic, whatever, I had the foresight to make adjustments and control to move forward without feeling like I was blind making guesses. So.
Yeah. Great. All right, let's wrap this up. We're going to come back in the next episode, folks, and we're going to talk more about forecasting. I've been speaking with my buddy Danny from BT Academy over in Canada. This episode was on budgeting, and it's part of the Measuring What You Manage, the only way to run a profitable trades business at scale series. Danny's going to leave some resources behind. He always does. They're great. Head across to the show notes or the resources section at thesiteshed.com and look for Danny's form there and fill in the form, and you'll get access to all of these amazing things that he's left behind. There's already a load in there. It'll just go and we'll just add these to the existing page. And Danny, what the best place to get hold of you is?
btacademy.com is our website. You can check out us a bunch there. You can email me. It's danny@btacademy.com. B as in Bravo, T as in Tango, academy.com. Happy to have a chat. I think in that form we have a booking scheduler. So if you want to have a chat with us or our team, you can book a one-on-one time for free and just basically happy to have a conversation with you and see if we can help you.
Yeah, do that, guys. There's a link to Danny's calendar. So if you want to book in a time to chat, go right ahead. All right, cool. Let's wrap this up and we're going to come back with the next episode. Danny, thanks for your time. I look forward to chatting to you soon on the topic of forecasting.
Awesome, Matt. Thanks.
Thank you for listening to another episode of Toolbox Talks. If you're liking what you hear, then you can head across to thesiteshed.com where you can join our community by signing up to our Toolbox Talks. You'll get sent a weekly notification, which is basically a highlight of everything that we've spoken about during that week, along with any other industry news that may be relevant or specific to the trades. If you're enjoying the show, you can head across to iTunes, Stitcher, or SoundCloud, where you can leave us a review. That would be fantastic, and all the reviews get read out in the show. Likewise, if you have any friends or colleagues that you think would benefit from this show and the episodes that we create, then please go ahead and share it with them.